Welcome back to another video. Look how well we're doing for the month of January. I don't think we'll reach the goal, but we're getting pretty close, and it's all because of you. And today we are talking to the Oracle of Omaha, Warren Buffett himself. There is a ton of talk right now about timing the market. Is the market in a bubble? We've done a couple of videos on that. I've also kind of tried to time the market myself with some of these option trades that I've been doing. But in this video, we're going to actually watch some Warren Buffett interviews where he talks about timing the market, if it's possible, how he goes about buying stocks in times of uncertainty like this. And then I'm actually going to respond as we're watching the videos. So let's listen to what Warren Buffett has to say. He always has some really great, even though it's simple advice, it's extremely good advice. And remember, like all the videos that I'm trying to create are meant to be long-term advice. It's long-term investing advice. I'm not going to be giving advice on this channel about day trading. It's long-term investing, things that you can do to be building wealth over the long run. So let's jump in and listen to what Warren has to say.
What would be the signs that you would look for to see that things were winding down?
Well, I look at a lot of figures just in connection with our businesses. I like to get numbers, so I'm getting reports in weekly in some businesses. But that doesn't tell me what the economy is going to do 6 months from now or 3 months from now. It tells me what's going on now with our businesses.
What's important there that Warren's talking about is, Berkshire Hathaway owns a ton of different businesses. So he gets weekly reports on the different financials, how they're doing in the market, different things that are going on in the company. But what he's basically saying is that just because there's certain things going on in the economy, he can't see what the future is going to look like. So even though he's getting all these reports today about how companies in his portfolio are doing right now, he has no prediction of what's going to happen in the future. And because of that, it's really hard for him to be making decisions in terms of trying to time the market. And even if you think about what was going on in February of last year, a lot of people never would have assumed that we'd be in a 1 year plus pandemic at this point. So you can't really see the future, and just because you're looking at things in the present on paper doesn't mean they really have a great indication of what's going to happen in the future. Let's jump into the rest of the questions.
It really doesn't make any difference in what I do today in terms of buying stocks or buying businesses. What those numbers tell me, they're interesting, but they're not guides to me. If we buy a business, we're going to hold it forever. So we're going to have good years, bad years, in between years, maybe a disastrous year some year. We care a lot about the price. We do not care about the next 12 months.
So we care a lot about the price. We do not care about the next 12 months. And that's just what we had talked about. So the price of what you're actually buying the asset for, or buying the stock, or buying the business is the most important thing, because if you're buying it at a fair price, at a good price, maybe even undervalued, then in the long run, whatever happens with the economy in the next 12 months really shouldn't affect you too much, because you own a piece of a really good business. In the case of Berkshire Hathaway, they want to be buying really good businesses at good prices, because when the price in the stock market goes up and down, the volatility really isn't affecting their portfolio that much. All right, next part of the question.
And we've never seen, at least the conventional wisdom on a sustained period of long and growing deficits while the economy is getting better, extremely low interest rates, and really very little inflation. So something different is happening, but something different happens all the time. So, and that's one reason economic predictions just don't enter into our decisions. Charlie Munger, my partner, and I, in 54 years now, we've never made a decision based on an economic prediction. We make business predictions about what individual businesses will do over time, and we compare that to what we have to pay for them. But we have never said yes to something because we thought the economy was going to do well in it.
So again, here's what we're talking about, where you would never have been able to predict what market we're in 12 months ago. And so basically what Warren is saying, and Charlie Munger, the vice chairman of Berkshire Hathaway, is you have to be making predictions based off the intrinsic value of the business. So what the business is actually worth, rather than making decisions based off what you think the economy is going to do in the next day, month, year, whatever it might be. So making a prediction based off of the fundamentals of the business is going to be way better in the long run for your investing strategy than trying to be predicting what the market's going to do, how interest rates are going to change, what's going to happen with inflation, and all of these things that are really out of your control. All right, let's keep listening.
Next year or 2 years, and we've never said no to anything because we were right in the middle of a panic even if the price was right.
All right, so you don't pay them.
So even in a panic, he's only going to be buying if the price is right. A lot of times too, in a panic, the prices are a lot better. So when people are panicking is usually a good time to be buying, or when you can actually be finding better deals. But he still is in a panic going to be buying stocks if they're at a good price. And I think that's just the important part, is that the value of a company and the price of the company matter way more than what's actually going on in the broader economy.
They make guesses, and there's so many variables. I mean, in the hard sciences, you know that, if an apple falls from a tree, that it isn't going to change over the centuries because of anything, or political developments, or 400 other variables that go in. But when you get into economics, there's so many variables, and the truth is, you've got to expect good times and bad times in business. And if you were to buy an auto dealership and you're, wherever you live locally, or a McDonald's franchise or anything like that, you wouldn't try and time the purchase. You'd try and make the right purchase at the right price, and you want to be sure you got a good business. But you wouldn't say, I'm going to buy it because growth this year is going to be 3% instead of 2.8% or something of the sort.
So again, super simple advice that Warren is saying here. But essentially what he's saying is that when you take like the apple example that he used, the apple falling from the tree, it's always going to fall. Those are variables that you can predict in the future. And there's certain variables like that that are very predictable. But there's also a ton of variables that are just completely unpredictable and shouldn't actually be something that you're wasting your time trying to predict, when those things are so fluctuating and so volatile that it really doesn't matter when it actually comes down to the price. So again, like when you're talking about the McDonald's example, in the long run, if you're buying a business or buying a piece of a business, then in the long run, whether you're going to get 2.5% this year or 3% growth this year, that is so small in the really long run of a long-term investment. So making a really short-term day trading investment, those percentages matter a lot. But those times when you're doing day trading or when you're trying to time the market, there's just tons of variables that are out of your control. So sticking to things that you can actually understand and sticking to variables that you can predict are really important in determining the long-term value of a stock, and not trying to time the market, because again, it's not really possible to be timing the market. We got one more interview, so let's check out the next few questions.
What should they be buying right now? So if I say buy, you say?
I say basically hold. I mean, the idea that the European news or a slowdown in this or that or anything like that, that would not cause you, if you owned a good farm and had it run by a good tenant, you wouldn't sell it because somebody said, here's a news item, this is happening in Greece or something of the sort. If you owned an apartment house and you got the raise your rents, and it was well located and you had a good manager, you wouldn't dream of selling it. If you had a good business personally, the local McDonald's franchise, you wouldn't be thinking about buying or selling it every day.
So here he is again talking about McDonald's. Warren Buffett loves McDonald's and Coca-Cola. But again, what he's basically saying is that when you're buying a stock, you're buying a piece of a business. So a good business, no matter what's going on in the market, is worth holding because it's a valuable asset. So a good business is worth holding throughout the market cycles, and whether you're buying a farm or McDonald's, just think about your stocks as a business, and buying good businesses over the long run is better than trying to time the market with things that you aren't able to understand or things you aren't able to predict. Let's jump into the last question and see what Warren has to say about timing the market.
Now, when you own stocks, you own pieces of businesses, and they're wonderful businesses. You can pick the best businesses in the world. And to buy or sell on current news is just crazy. You're in a wonderful business. You got people running it for you. You know you're going to do well over 5 or 10 years. And to think news events should cause you to try and dance in and out of something that's a wonderful game is a terrible mistake. So get into a bunch of wonderful businesses and stay with them.
So get into a bunch of wonderful businesses and stay in them. That is some amazing advice from Warren Buffett. And I think, again, the thing to remember here is when you're buying a stock, you are really buying a business. You're buying a piece of a business. So you want to be making sure that you're buying a piece of a good business that's going to be valuable in the long run. And if the one other example that Warren Buffett always talks about, not in these interviews, but other places, is that when you're buying businesses, almost think of it like buying or selling your home every single day. So a stock based off of these apps like Robinhood and whatever your online trading app might be, it's extremely easy to buy and sell stocks every single day, multiple times a day, multiple times an hour. But if you were to go onto Zillow, let's say you own a house, and you were to go onto Zillow and see that the price increased by $5,000 over the last month, you would not be in the same mindset of buying and selling your home on a day-to-day basis. It's a business. It's an asset that's actually going to gain value or lose value throughout a certain amount of years. So thinking of your stocks as a piece of business and not as something that you can trade and gamble around will really help you to be able to make better decisions with your stocks and your investing compared to actually doing it based off of things that you can't predict and trying to time the market. So if there's one takeaway that Warren's trying to say, it's that timing the market is really not something that you should be focused on. The economy is something that a lot of times is just so unpredictable. Knowing what the Fed's going to do, just knowing what's going to happen with GDP or other countries or turmoil that might be happening. So just buying good businesses, holding them in the long run is going to be a much better strategy for your portfolio and for you to actually build wealth as you go throughout your life. Thanks again for stopping by Quinn Talks Money. If you could help me out by just liking this video, I would really appreciate it. I'm trying to grow this channel and I really appreciate you being here. We're also trying to get to that 200 subscribers, so anything you can do to help share this out and just be a fan, I would really appreciate it. You're awesome, and I'll see you next time on Quinn Talks Money.